It's unnerving. When crypto is swerving, your portfolio is veering down a deep black hole. But if you watch Road Dogg and you listen closely, he will help you gain control. Well, if you think this channel is groovy and you'd like to show your support, well, there are a few things that you can do. Find that like button, give it just a playful little smack, and subscribe and join the channel. And let's hit the like button now. Let's hit the like button now. It's just down and to your left. And you tap with your right. Look over to the side, where you can join and subscribe. This crypto rival that really drives you out. Let's hit the like button now. Let's hit the like button now.
For those of you out there that have been hitting that like button, I just want to say thank you. Thank you very much.
Well, welcome, ladies and gentlemen, to the 8th Chart School live series. Glad to have you guys here. I see about 6 of you hanging out, 7 concurrent viewers. May have a few kind of trickling in here. Tonight, I just wanted it to be like an AMA where you can ask questions, especially over anything we went over before, maybe recap some ideas. A lot of people absorb information at different speeds or whatever, and we've had a little break. I haven't done these in a while since surgery or whatever, and that's put me out for a little bit. So hopefully we're back in full force. Last stream that we did, we went over Fibonacci, and I was kind of breaking that down. That can get more advanced in future classes. We can go a little bit deeper into some of that. But we went over a lot of things, went over support, resistance, trend lines, which I think is very important, and we can even do some more advanced trend line kind of techniques, and you see me do things with angles and how I can use those to help me kind of predict or forecast some areas of support and resistance. There's lots of targets out there to do that. My system of analysis and how it fits in my trading is that I'm looking for those pivot points, those targets. I want to know where price is going to change. I want to try to know where things are going to reverse and where things, and it helps me. They say you can't always nail the tops, you can't nail the bottoms, and that's true, but you can get your fair share of them with a few little strategies and a few little ideas. And it's just a meshing of things together that I put together that help me, and hopefully my goal is for the channel and share these things. And trading is and analysis is different for everybody. Everybody uses different tools, different indicators. It's what resonates with you. So I just show you the tools that I'm using, how I use them. If you say, hey man, I like that tool, let me borrow that, and you take it and you run with it and you make it your own. You work with it. And that's how we just kind of grow and evolve, in my personal opinion. And everybody's their own stylistic way, and even the way that you trade. I mean, everything is so individualistic in here. It really can be, but it all overlaps. We all got these basic rules and things that we try to follow and go by. Many of them laid down by the greats who have been here before and made their fortunes in the markets and Wall Street and commodities. Whether it's stocks, gold and silvers, or options, or whatever events that they're trading, if it can be charted, you got an eye, you can play that little sucker. And so I always stress that you never forget the greats. You've always got somebody trying to fancy up and repackage old ideas and put new labels and whatever concepts to it. Most of the ideas have been thought of. A few old things, maybe new technology comes around. There's some few little bells and whistles. But it's basically the same thing that we're dealing with, and it all boils down to human emotion. And not just whether somebody's fearful or greedy. I mean, that's a lot of it, but there's so much other things that tie into that. And I think you'll notice that when you start this journey out, if only I knew where price is going to go, if I knew where to get in, where to get out, That's all I need to know. And that's what you focus on. And then you kind of learn, well, even if you know that, even which nobody really knows, we have some probabilities that we play. It's a step up from gambling, and we don't want to gamble. We don't want to just flip a coin and see how many times that we can win something or pull a lever. We're trying to put some thought and processes into this, kind of strategically kind of navigate this to where it's a little bit more on our side, where we win more than we lose. And that's how we start building our portfolios and start turning this around, where it's not just something we do just out of fun to see accounts just slowly dwindle down. It's where it's something that is kind of enjoyable and a road to self-discovery, and it just propels us to get better and even builds character. I believe it can, because it makes you made me have to look at myself and how I process things and emotions, and realize, maybe some things I didn't think were emotions were really emotions that were dealing with my head. I'm going to switch over to the turkey because that might be a little bit more. I don't know. He just comes across a little bit better than this little wrestler looking guy than I am right now. Where are you, turkey man? And, oh, look, he's back. Ah! See, this is more personal, just more crazy. The turkey's crazy. All right. So, tonight, let me go ahead and say hello to everybody here. And we got 11 people hanging out. Now, probably have some new people, possibly. There were a lot of free memberships, and a lot of you guys probably got your free membership too added on. I don't know how all that works, but I know there were lots of memberships thrown out there this past week, courtesy of Brave Expanse. Shout out to Brave Expanse. Do we have clapping hands over here? My clapping hands don't work on the screen? Is that what I'm seeing? I'm so tired of my clapping hands not working. All right, well, so Brave Expanse, really supported the channel this week, and gives you guys a lot of benefits too. So hopefully I can continue. It inspires me to continue to add value over here to this membership area, and it's even for the people paying out of pocket. I mean, I decided to keep it just at the $3. That's the normal little thing. Now, a lot of people are jacking that up to whatever for whatever content that they deliver, whether it's crypto or any other niche out there. I'm not trying to ream anybody out of money. Maybe I'm the stupid one. Everybody else is getting pretty wealthy doing all that. But I feel my calling here is just to share what I've got, because I remember what it was like and how hard it was to find this information when I first started 4 years ago, trying to learn TA. Now, I've been in crypto since about 2013. 2013, I think, is when I first bought my first foray into Bitcoin purchase, and I even went the mining route. I thought, why do I want to buy it? I'll just mine it. That sounds like fun. Anyway, the story there. But learning TA, and I got into bots. I did this totally ass backwards, but then I got into bots, and I got exposed to trading with indicators and that kind of thing. But I didn't learn TA. It would have made more sense to me if I'd known that. But when I finally did, because I thought it was too hard, man. I thought TA was too hard. It looked too complicated. I enjoyed reading. What I did learn is what I'd read, is it Cointelegraph? Wherever they do the news, somebody, there's usually a good analyst out there, and they kind of explain what they're looking at. That's all you got to do. And they're using RSI and some other things, and making it to head and shoulder patterns or whatever. That was the first, solid education I got with that. I joined a trading group and got educated there on some of the basics, basically walking you down whatever you find on this Investopedia, and then that person's mindset. The thing about that is, unless they're sharing their sources with you about where they're getting this information, you don't know how accurate it is, and you don't know how much has been regurgitated, and you don't know how, a lot of times when things do get regurgitated, there could be some misinformation and everything. So I think it's imperative, and it's probably because of, my journalism training or whatever back in the day, you always list your sources. And when I stumbled upon Thomas Bukowski, that was very enlightening for me. And it wasn't through the trading group. It's like they were holding that secret dear. They didn't want to reveal their sources any more than they had to. If they learned a technique or something, nobody ever got credit. Is and I think that's the way a lot of things operate around here in the space. It's sad, really, because if you don't cite your sources, you're not very credible. You can just be pulling information out of your ass and making up numbers, which I see a lot of that go on. But you always see me, and even here, I'm going to refer you to Thomas Bukowski's, either his book, which is an encyclopedia, it's a reference. I don't have it down here, do I? This is a reference idea. So if you're a pattern trader, this is your man. This is the man everybody's quoting. Or half-ass quoting. This is the man that everybody's stealing the information from and selling to you for pattern tradings. If you want a good education on it, and you just do it, you don't have to just like, oh my God, I gotta read all these. No, you look at the patterns as you come to them. And you may not know what the names are. That's why our channels can be kind of helpful and things like that. And the Telegram community that we have over. It's free, Telegram community. Or you can, but he's also got, it's not very pretty. I mean, this site's not very pretty, and I'm sorry, but this is where the alpha's at. You got a visual index over here, and I keep pointing that out. And so you can kind of get an idea, diamonds and whatnot. Maybe you Google, you see the patterns on Google. You might see a better pattern there, but you get the name of it, you come back here, and then you can find the real alpha on it. Because this old nerdy dude, a computer software engineer dude, retired from trading, actual trading, in his mid-30s, and now he just does a lot of this stuff for free. He's got software. This site's an amazing site here, but I always refer you over to here if you want a solid education, because that was one of the most helpful things I got, where I got accurate information. And it's important if you want to, if you're taking this serious, get accurate information. And a lot of these people are joining with the trading groups, and if you get a good one, then okay. But there's only so much there. Most of it's motivational talking rather than actual teaching and instruction, or what instruction they give you. How you got a question, how well those things work. Just my 2 cents in, but you can never go wrong if you read the masters, the people, not just Thomas Bukowski is more like a modern master in this field, but the ones that are long and gone, like W.D. Gann, Wyckoff, Charles Dow, so many of them, William J. O'Neill. There's so many of them out there that have done, that we use all that stuff. The cycles and everything, and that's where all the information, the real good information, in my personal opinion, comes from. And I think you learn a lot from studying them. So let me come over to the chat, and we'll see what direction is this stream going to take. Do we need to go back over fibs? Do we need to cover back anything? Anybody got any questions about anything? Maybe something we haven't discussed yet. My plan was maybe to recap anything you had questions about, and then I've seen some of you guys mention about about entries and trade entries and things like that. And maybe sometimes when I do a trade setup, because I don't all necessarily get all specific on them. Some people get really specific. Enter here, do this, and then they follow up and updates and things like that. Now, I'm sorry, but you're not going to see me do that. So that might be an advantage of a paid group, as they have a motivation to maybe do some of that stuff. Some of them just post trade setups and let them go, and just quote the ones that won, or playing a numbers game. And then some of them actually follow up and give you updates and things, and that's a good thing. That would be a good thing to see in a trading group. Some of them just kind of expect their members to take over while they just collect the check, and fortunately, that's kind of the one that I joined, where I think the guy is deceased now. That's kind of what happened there, and I see that kind of happen in other places. But then you get some that actually, you got somebody there. They tell you they're going to hold your hand, and then you get there, and they're like, Google's your best friend, man. All right, let me come down and see what we're talking about, and we'll take the direction of this stream where you guys want to go. MG Motorsports, we got you. I thank you for hanging out, man. Glittery Marshmallow, keep doubting myself if I am pulling my fibs correctly. We'll go over that. It can be confusing, and I did it wrong for a long time because, well, I was taught wrong. Nobody told me. But I got you. And that's why I got this little rhyme, and even got a few little songs that'll help you out with that. So I think we can get that done tonight, hopefully. And it's, let's see, it's last highest high to a new low, or because I use them. Okay. What timeline? If you're talking about time frames, that is not as important with fibs. Fibs just go on price structure, so time frames are not important with fibs. That's what makes them kind of cool. Moving averages and your other indicators, RSI and all that stuff, they depend on what time frame you're looking on. Fibs do not. They are magical little unicorns, and we love them. But we will, okay. Let me come down and see what else. But we'll get you. I think I can get you straightened out on that tonight. AD says, appreciate your time. Hey, I appreciate you guys. You guys are the ones giving the time, man. I mean, for real. I'm on here just doing something fun that I like. And you guys, find value in it enough to be in the membership area, and to even, some people might laugh and say, you didn't charge more. And I'm like, it's not about that. But it does. It's a barrier, though. And not everybody's going to jump out there. I don't jump out there. I don't like subscription fees. I don't like that. I don't know. It reminds me of when the internet first came out. Everything's subscribe to this. It's just, and then you would subscribe and you can never cancel it. And just like, how the hell why do I keep overdrawing in my checking account because of this? Maybe that's it. Hunan says, hey, well, let's go to the right. Dave Forget. Yo, I'm just skipping everywhere, aren't I? Yeah, hello, and thank you very much for the subscribe. I appreciate all the subscriptions and all the memberships. Really, it helps out a lot. Hey, Road Dog, did we ever finish with fibs? I want to understand targets with fibs and what makes it a target. It can get a little deeper, but yeah, that's good. We'll kind of recap on the fibs here. It looks like we're starting to get a theme going on. Okay. You should have a mining class. I haven't mined in years. I mean, I've got a Caspa mine. I got 2 Caspa miners that are running, but they're pretty easy to set up. But I got a Litecoin miner somewhere, outdated AF. I don't even know if it'd be worth turning on. But I really haven't. I'd like to get into it. The game plan, and I'm very behind schedule, was to have a little mining check going. Class Hopper says, time for school. MG Motor says, trade setups would be a great thing to see, especially for longer swing trades. I want to move from 15 to 15 minute trades to look for longer swing trades. And that's just, I mean, basically, you're just applying those same principles on bigger time frames in essence, or that's how it works with what I do. Okay, so Fibonacci, and then going over some trade setups. Okay, we'll try to, let me write it down so I will not get too far off. Yeah, it sounds so easy to remember, right? Pen and paper ready. All right, so Fibonacci. So you're thinking you weren't confident on how to pull them, or if you're pulling them correctly. And I need to get do we have any chart here that's blank, halfway blank? And that one's got words. This one? What's this one? This one got any? No, look, perfect. Okay, I got a blank chart that can be even blanker. And I'll just stick with Bitcoin here. Okay, so the first way that I ever learned to pull a fib, and they would just say pull it from a bottom to a top. And when you get it, at some point you're well, which bottom do I pull from? Well, the general rule is from the very bottom. And so, I mean, I have to zoom out to get to the very bottom of the low here, right? You can pull from others. Most notably, you're looking for an impulse move to measure with your fibs. And what that is, you get high. I don't want to do it that way. We'll just use this spray. That's crazy. You get your high, a low, and if you're in an upward trend, we're looking for higher highs and higher lows. However they may come, and they may balance out and do something like this, and that's basically what we're looking for. Okay, so from here to here is called an impulse move. And that's ideally what we're trying to do. But we can measure each individual impulse move, or we can take this, because this is also, especially if you zoom out to a bigger time frame, maybe that would help too. Maybe time frames would be helpful to help you kind of narrow in, but they're you're not dependent on time frames to pull your fibs, really. Just bottoms to high. Or we could take this whole move, like in Elliott wave theory, there's usually like, you know, five waves, which is basically 3 humps or something like that. They use fibs a lot, and they do that. So, and that's it. To make it short, we're looking for an impulse move, basically, and that's just a bottom to a top. So we will go from the swing low to the swing high. And this is our swing. Swing low to swing high tells me where I need to buy. And that means a retracement. That means where price is going to fall down and find support. So when you pull from low to high, all the fib levels are telling you support levels. And that's all I knew for the longest time. And you can, and I know people that do this, and it's fine. Just playing these level by levels, just as there's support resistance, and it's just the little ladder we climb up and down. And, you know, they'll hit, and sometimes they may not hit exactly, they may go through it, but they'll basically kind of hold those levels, and you can play that. I mean, for upward targets, for all the targets, this is what they do. And you usually, on your basic fib, it's like when you go to an exchange, you're just going from 0 to 100. On here, I've got all the extra ones, and I think we went over that in previous videos, and the ones I use, and I don't know if I really broke down exactly why, but there are certain ones that I use. I even got 2 that are close together, but there's a reason. There's some guys out there that I know paid trading groups, and they got fibs on there that they don't even know how to use. The 706, they don't even know what that is. You never hear them talk about it. They got moving averages, you know, that they don't even use or talk about. And that just amazes me because they come out so confidently and talk about, we'll teach you the secrets. But you know, when you watch them pull things, you can tell that they don't know very much about what they're doing when it comes to some of this stuff. And especially fibs, I can tell you right now, I can spot who knows what they're doing the fibs and who doesn't, because I know what I've learned from them. And still, there's a lot that I have left to learn. The fib is a rabbit hole. It can get fascinating. So from swing low to swing high, tell me where I need to buy. That's my little incantation that you'll hear me say, and that's just so that it will drive home that exact point that you're talking about. And hopefully, the reason I do that, just, you know, you hear it, and hopefully it'll get stuck in your head. And I got a couple of songs with that to kind of reinforce that. That's just what I try to do on the channel. Oh my God, are you trying to program our subconscious mind? That seems to be a popular claim here, but it's a mnemonic device. Okay, so swing low to swing high, and then all these little levels, those are support levels. All right, and that's the main takeaway that you need to know. Now, which ones we go at, that we get there. We get there. Hold on. All right, and now the other way is we go from swing high to swing low. Tell me where price is going to go. And what that means is not like, tell me where, tell me, you know, predict, well, it can be, but it's tell me where the resistance areas are. Where am I going to bump my head and probably fall down? And this is a lot more accurate to do it this way than what we had over here. Cause if we just had, oh man, we screwed that up. If we were just pulling the fibs this particular way, we would say, okay, we'll come back up and we'll retest this area. And yeah, there'll be something there. There will be. Or we'll retest this area. But there are all these little fine little areas that we might retest a little bit more. And you'll see some overlap, and it's not wrong for somebody to play that. And that's a strategy in its own, but there's some better strategies. And pulling from the top to the bottom to find the bump your head resistance areas. This 618 is going to nail it just a wee bit better than this little guy. And so you get more accurate levels. Now, if you ever do pull your Fibonacci's, and one thing you should always do and get in the habit of, is looking to the left and seeing how they line up with previous areas. And let me see if we can zoom out here, and let's get some more let's go with, like for instance, if we're trying to predict, what's going to happen over here, we'd go swing high to swing low. Tell me where price is going to go. So when we come off this bottom, where are we going to hit our heads at, and what levels are we going to do? And now I think, we don't know it at the time when we're seeing it here, but if we go ahead and just pull this idea, let me just lock her in there, and we pull it forward, I think you're going to see a lot of those levels get hit, and it's just like magic. And it does this on all the price action. When you pull it, because we don't know when we're pulling from behind the low what this is going to look like, but the fibs kind of lay it out for us, really beautiful. And now we can in hindsight go back and look at that fib pull, and we can look at everything. And so the basic thing that I would want you to take away, we're kind of getting to the basics before we get to the advanced, is it's a 100. It's a way to measure a ratio or a proportion, I guess. Sometimes I get those confused. It's a scale of 100%. And the way that we pulled it, we went from, let's see, our 100 is at the top and 0 is at the bottom. All right. And if we take this idea, I've got a lot of these fibs. I'm mostly concentrating on this little area from 0 to 100, this little box here. This is your normal fib pull. All this other stuff is some extras that I throw on, okay? And I use them a little predictively. We will get into that more, and we did touch on it last time, but I think it's kind of important just to go over the little bit of the basics now. I think the best way to approach this is just like the market. You divide these little guys up in the thirds. And so you got a top little section here, 786 on up to the 100%. You got this bottom little area, maybe even up to the 382, but definitely the 236 areas. This could be, to kind of quote some common terms that you hear now. You hear things like discount areas and premium areas. Basically, it means, the top of the range, bottom of the range, that kind of thing. That's what it is. And so this is proven in hindsight. If you got a high to a low, this is the juicy area to be getting in, anywhere under the 236. And that's what I've tried to reiterate. This is the most basic way to look at this. And this is a ladder that we're just going to climb until we get back up here to the top, and maybe a higher high. And that's where these guys come in. But here's the juicy little middle. And the key thing about it is between the 618, that little golden ratio. Now, price usually always goes there. That's kind of like our middle baseline, really. I know there's a 0.5 there, and sometimes it's a little more relevant. The 618 is the magical number we normally just look at. That's where a lot of people are going to make a decision. That's kind of like the 200. Think of this like the 200 moving average. When you're above the 200 moving average, you're bullish. When you're below it, well, you might be bearish. Same thing with the 618. You need to look at that as being our middle line, our baseline. So if we're above it, we're probably pretty good. We hold that, we're ready to go up to the next section, which would be from this one 618 to this 618. We got another little box. But that's a little bit more advanced for the basic concepts we're going through. But that's true. Then once we get past here, then we're in this section. We're in this territory to play. But until we do that, then we're either still stuck in the middle, or at worst, coming somewhere below, back down to here. So it's important that we get above a 618, definitely. And at this point in the market, you're going to hear me target the 0.5 a lot. So I hope if I break that down, that's a good way to look at fibs. Just divide it into three little sections there: a bottom section, a top section, and a middle section. And it's so simple. It's so simple. Once you're just looking for a price to just climb up, however it wants to do it, because it had to come down. It had to come down to here, and there's a lot of things it can do down here. But double bottoms, it makes bottom pattern. Look for bottom patterns in through here, because that's where they're going to happen under your 236. And once you break above that, that's your good sign that, hey man, we may be changing trend. Things may be looking positive. We're gaining traction, and then we're trying to stair step our way up. Sometimes we skip through levels, but most notably, that 618 is usually where we get the first bump down, and that's why it's always a good target to go with. And once we, do get a pivot point, we can take smaller fibs and measure them, but we still got our bigger fib level, measuring from our high to low. Until we break that high and that low, this fib pool will have the most weight. And so that's the ones that we got to pay the most attention to as to where we might get reversal targets. And 618 that's just your standard. It's kind of like your 200 moving average. It's your golden one. That's why I keep my 200 moving averages yellow because it's the golden average. That's how I term it. And the 618 is why I keep them yellow, and because that's the golden ratio. That's why I keep my 618s orange, because they're yellow, but I know I can tell by that color coded that way, so I know to pay a little bit more attention to it. And hopefully that makes a little bit more sense. Okay, so let's see if I can get back to pulling them. I'll tell you what. First, let me come back to the chat and see if there's any more questions over what I went over there. But this is the pull, and then you can see how it respected at each of these levels. Now, she went through this one, but she got all the way to 618, pulled back. And remember, we're not really looking for support with this pull. We can as a retest, but we're looking for the areas that price is going to go get rejected at, wherever it's going to bump its head and come down, and that's what they can tell you. And the common areas are, of course, the 618, and I would even say the 786, but we blasted right through that. Sometimes it will surprise you. Sometimes it will surprise you. I'm kind of surprised that it didn't nail this 1.13, but it did find support there. It was relevant. It just wasn't the resistance right there, and had a little hiccup here. It went through it. I didn't expect that. I would expect it to get knocked out there, but we didn't quite make it. But it is still relevant. It doesn't mean, oh man, that sucked. No, it just found it as support. You'll see that happen a lot. If it blasts through an area, or maybe it doesn't touch on something, that might still be your support area. And that kind of gives me confidence. That kind of makes me think that, gee, I really hadn't looked at this idea before. But that little bottom of Bitcoin that we got down there at 76 when we went down there, I retested that 113. That might be bottom. That might be just the retest, and that would give us the separation we need for an Elliott Wave kind of deal too. Just think of other things that could come into play here. I kind of like that. I hadn't really paid attention to that before. Curl. But you see how we got rejected here, and then we came right back and tested that 618. That's how strong the 618, and that just confirmed a support resistance flip. So this particular area is very, very strong. If we were to fall back in price, we probably would not break below that at all if we even came close to it, just because of that back. Same thing kind of going on here. That's actually kind of strong. Now that I'm looking at it through those eyes. And a lot of people are still calling for, 68,000. All right, let me come to the chat. Let's see if I've confused everybody more, or if I kind of cleared some things up. Get a drink. This turkey's dry. And trade setups, we'll go with that here in a little bit. Jungle Boy says, they say follow the 20 simple moving average. That's a good one. That's what you see in Bollinger Bands. That's your middle band. Then you got standard deviations. The outer bands are just standard deviations from that. That's a good one. I use a 21. It's just one off. I've explained that before. It really doesn't make that much of a difference. They're so close together. But yeah, you want something in that range. It's a good one. That and the 200. And I like the 9. 9 gives you a little extra. You need some small ones and some medium ones and some big ones, in my personal opinion. And once you got that, you can get a nice little strategy of how they react to each other. Glittery Marshmallow says, I think I just needed confirmation that it was really that simple. Okay, so it is that simple. Swing high to swing low. Tell me where price is going to go. Swing low to swing high. Tell me where I need to buy. It is that simple. Poor PC guy says, "Ooh, this is a great topic. I'll definitely be watching this back once I'm in the air again." Well, you traveling a lot, ain't you? That sounds like a cool job. So if Ryan K says, if we bounce down off the 618 and lose the 0.5, do the other levels act as support? Let me see if I can. So you're saying like if we were here and bounced down and bounced off that, would and if we lost that, would this one act as support? They will always, I mean, once support and resistance, they kind of stick that way. Let's see. Now, I pulled this, and we ended up looking to see how well it played out and how it respected it in the future. But I think one of the points I was wanting to make while I had this idea, when we're pulling it down over here, wherever these levels show up, we can look to the left, and you can usually see support resistance areas. That's one thing to look at when you're pulling your fibs. Always looking to the left, and you often see when I pull a Fibonacci that this first one, that 236, it usually nails a support resistance flip area, and that one's really, really good for nailing a really strong one, and that's what we got here too. So that's my advice. When you pull them, look to the left and just confirm. And if they're out of line, then maybe you may not have a bottom in yet. Those are some ideas that are kind of helpful. But if they do kind of line up, then you might be just right on point and everything. Sometimes you can pull a fib before the bottom's in. You gotta know. How do you know it's bottom? And you'll see me do techniques on the stream to help me kind of figure those out. It's not 100% accurate, but it's more accurate than just saying, oh, I guess maybe it is. Cross our fingers. If I see certain fib levels hit from when I pull fibs on the extensions, it's pretty accurate. Let me make sure. I think I danced around the question. Did I? So if we bounce down off the 6, okay, so I think what I was trying to get to, so that would be just still staying with this fib. Now this is where we can get, a little bit more advanced, and we take the other fibs. Wherever we get a top, and like this one up here, any of these fibs, you see me, and even an impulse move in between, like from this bottom to that one, we can pull fibs on all these little guys, the whole thing or part of it, and we're going to find some relevance. But just remember your overall fib from whatever the bottom is to wherever your current top is. Local, this was the top at the time, then we ended up getting this one over here. That's going to be your strongest one to look for these levels. And so from going to the bottom here to up here, well, now we got a whole different set of fibs. We need to go back here. I would say, to answer your question, if you play it this way, yes, you would be just looking at the lower levels. And you're likely to see them maybe come down and touch them or come close to touching them. May not be perfect on that way. To be more accurate, you would take a new fib from the low to that high, and then you can nail some more important areas. Like on this one, the 382 is a good one, and it wasn't exactly perfect on this. Now, if we took just this move from where we started here and really got our leg up, you can see the 0.5 was really more accurate, and so that was a good. The impulse move will give you some good information too. But you kind of want to kind of mix them together, kind of do both. Get the overall, because that kind of has major jurisdiction over it, so to speak. It can also give you some insight on some other targets if you're using the extensions, like we came up and nailed this 618. I mean, nailed it. That's how cool they are. But like we said earlier, the impulse move. So I would be looking for this bottom to there and the 0.5. And we also compared that to what we had over here. When we're getting into the more bullish parts of the market, I mean, it's not always the 618 that's going to be the winner. sometimes, but not always. And price history has shown us on this move, and even from here to there, we've been coming back to 0.5. And when we're getting a little bit more bullish in the market, yeah, we're going to start pulling back a little more shallow. Usually the 618 is where we start out at, but as we're starting to get into a run, this is why I'm starting to look more on the 0.5s and even the 382s, because these are going to be where we start getting the bigger, stronger bounces. If we're in a bull run, we're not going to be pulling back to the 618 as much. We might on some local moves and things like that, but in the overall thing, if we're trying to do any kind of, I guess what a lot of people will be looking at is flags when you're zooming out, and a lot of people are looking for flags. But a 382 or 0.5 bounce is what we're looking at for most of those at this point in the market. And we'll go from this move to this one up here, same thing, 0.5. That's why this is so cool. Then from here to here, we bounced off of a 0.5. And then from here to here, it didn't nail it perfectly, but we got a candle. We didn't nail it perfectly as far as the wicks, right? It came down to it once and it came down to it twice, but the candle bodies are closing above that. You count that. When you get involved in a situation like that, if your candle bodies are above it, definitely. We're counting this for any calculations that we get or any predictions, because sometimes you can take where we bounce from, and this is where we'll start getting into more of this, and probably in the next stream, can help you predict your pivot point, your higher high pivot point. At least one or two of them. You usually have about two separate targets to kind of look at there. And that's one of the things you'll see that I do, and we might come back and look, nailed it. It doesn't happen every time, but it happens more often than not. And it's basically an AB equals CD if you want to go back to Thomas Bukowski's patternsite.com and dig in on your own and all that stuff. A lot of this, and I learned this through this idea started hitting home with me a little bit better after I started studying a little bit of Carolyn Broden. And she's got this whole big thick book and travels around the world talking about her little Fibonacci things, but it's basically an AB equals CD type. It's basically an AB equals CD. So you see, you can take a whole little idea and just make a whole career out of it, apparently, and that's kind of a common thing. But if I had to sift it all down to everything, it's an AB equals CD pattern. And let me show you where you find that over here. The bearish one, go figure that. That's where you get the higher pivot points. It's a bearish pattern. Why would they call it that? It's going up. Because when it gets there, it's likely, it should be more likely over it. However, if you study this, you'll find that a lot of times they just go through a pullback and they can continue on. Thomas Bukowski talks about that. Here is an example of one. So you see how cool that is to play. It's a bearish thing. Mid targets, but then it does a little pullback and we can still keep on going. But this is a life-changing strategy, I think, and that's definitely worth studying right here. AB equals CD, and plays into the fibs. All right, so now another thing we're talking about, trade setups, and a lot of them are going to be pattern based. I don't know. I mean, there's so many things. What you need is an idea, for one thing. Oh gosh, this can get kind of deep. We can get really kind of deep on this. We may have to do another stream on this, but we can go over the basics. Oh man, don't let me be that guy. Don't let me be that guy that used to always draw this in the trading group. I hate that. No! But it feels just as bad when you take it back here and like, oh man, you still got that freaking shape. I hate that. But that's just taking bottom trend lines and top trend lines. And I guess it's normal. All right, so trade setups, the basic essence is a breakout or buying on the bottom trend line. That's usually kind of the thing that we look at, or how I'm gonna start explaining it anyway. And breakout trading is one of the first things that you learn when you get in trading, especially when it comes to patterns. And whatever time frame you're on, you can usually find some kind of shape, some kind of pattern, and some kind of trend line to draw. But breaking out past the trend line, and you're buying the breakout or the retest of that idea. And there's several different ways to look at this. One thing that you need, now sometimes I see people, they'll draw a pattern, usually a flag or something, and then before you know it, they're in a trade, and you gotta. There should always be a trigger, and even Carolyn Broden, talks about that. You need a trigger. What's going to tell you to get in? You got to have something telling you to go in, not just the shape that you happen to be in. And so I'm just going to go in here. It just proves not to be the best way. We all do it at some point, even those of us that might spout out. Nobody executes perfectly, but we the rules to go by. My trigger is my 9 moving average. That's one of them, and a breakout. So, for instance, if Bitcoin decides to print a candle above this trend line, and given that it's above the 9 moving average, and we get a breakout there, I'll probably be tempted to put an order in. Now, some people don't like to do that at all. Especially some people don't like trend lines like this. They go level by level, and maybe they'll look at a trend line breakout, and that's fine. Everybody's got a different risk tolerance and everything like that, and they will do the different kind of breakout trading where they'll wait till we get above a level. Now, and you might see that now Joe does it like that, and that's a legit way to do it. I don't do that because I've gotten burned too many times like that. So you might hear us, have different arguments about that. Doesn't mean that either one of us are right or wrong. It's personal preference, really. Of course, we're all going to lean toward our bias and everything. It's no reason to split hairs, ladies and gentlemen, because everybody's going to interpret that differently, I think, with their risk tolerances. Some people want to get in front run. Some people want to wait for a confirmation. And this would be a manner of waiting for a confirmation. It's actually a smart move. And you're hoping for a retest, but it doesn't always happen like a retest. What usually happens is that, you get your higher high, and then you come in and you make a higher low, which could be anywhere technically above that low. And sometimes that happens. And it can happen. It can happen a lot. And after it happens so many times, you're like, well, this kind of sucks. I'm going to try something different. And eventually I got, the breakout trades. Buying a breakout, like when you get a breakout past a trend line. The reason why they teach that is this is what we're hoping for. We're hoping you'll find support. And that would actually be when you'd want to get in. And I think what happens, we're above it, let's dive in, and then you come down, and then you're in drawdown. To play it that way, and I'm sure Joe teaches this, you got to wait for the confirmation bounce, and then you got a chance. Then you got a chance. But it doesn't always happen that way. Usually what happens, just like we had here, and we got above this level, and then you come back below, right? But luckily, it was still in an upward trend. At some point, it's not going to be. And it can bounce off before, come up, and bounce off. So, that's just the risk that you take for, and you got to figure that in with your trade setup. But I do like having an indicator as being a trigger, and the 9 moving average and whatever it's doing. So it's bullishly crossing, and that's good. We're above the 9, everything's fine. I use the 9 on this, and another aspect I would use is time frame. See, now here we see a possible breakout here on the daily, right? And if I was really wanting to try to nail this, I would come down smaller time frames. Come down to the 4 hour and see what's happening. Looks like we might have a possible flag above 200. Might get a bullish cross here. I'm looking at all these little things, okay? It might also roll over. May not work out. We got some work to do. And I'm getting more involved with the noise, and then I can decide, can I get in cheaper? Does it still look as good? And those ideas, you kind of scale into it time-wise to find a good entry. And here, That was kind of cool. We're still at a pretty good place on the 5 minute, in my personal opinion. If I were trying to get in, that looks like a good sign. And then trying to tailor in to find a signal here. So you can nail it down time-wise to just nail down your entry when you make a trade setup, or get a trade setup idea on a bigger time frame. That's something that I like to do. But it's your risk tolerance. Some people are going to wait for the confirmation, and some people just can't do it, or have, the little degen gets a hold of it. Or we're like rationalize it. Screw it. I'll deal with it. I'll just put my stop loss. Everybody's got a different way to approach this. Not everybody looks at everything the same way. But whatever trigger you got, it could be a RSI. It could be that little green dot on Market Cipher being your trigger. Or a combination of them. Little things that you can do on the RSI to kind of guide you. Like here, RSI, we kind of lost a level. If she breaks up above that level, trigger. Because right now it's saying I could be rejected. Looks like she wants to get rejected here, honestly. So that would be a little confirmation. So there's all kinds of different little triggers out there, and you can probably do a search, or right now, and probably just easier just to ask AI to give out. I might have to do that and post that in the trading community or something. A list of common triggers that people use to enter a trade. But you need a trigger, something to tell you, hey man, I need to press that button. But I do see, some of the flag chaser guys in the mornings on the 1 minute, you'll see them just draw a pattern, and all of a sudden they're in the trade with, I'm going to take a risk on it. Sometimes, now, the one particular person that, one strategy that they're figuring out, the 200 moving average, anytime you're above it, you are bullish, right? They just don't understand how the relationship, I don't think, of the other moving averages, right? There's times when, you see a bearish cross in one, and they're not paying any attention to those things. So, I don't know. So we look at things a little bit different sometimes. Not trying to bash their system, but I'm very familiar with this whole 200 moving average thing because my bots worked on that. I played there was an SMA 200 moving average strategy you could use on 1 minute, 5 minutes, whatever time frames you wanted. And I tested that one out and got feedback from the OGs that were doing it. And it was break even mostly. And if you notice, the guy is doing it now he's starting to incorporate the different time frames. Now he's onto it because that's how you got to do it. You can incorporate it in different time frames. Ideally, you want to go on a bigger time frame and zoom down into it to get into your entry. So you'll find something on the bigger time frame, then you go down to the 1 minute, wait for you to get above the 200. And then you know where to get out already from your bigger time frame. It's just, I don't know, it's kind of wild that some of the things I see, the way that they're explained, but that is a thing. But now, if you just did it straight on the 1 minute time frame, if you bought whenever you got above it and sold whenever you got below it, there would be a little bit of something there, but it's not a winner. It's not the profitable strategy that it's led on. But now, if you do it like I think what he's doing now, he enters on a 1 minute, and then you have a bigger 200 moving average. Well, you better plan that ahead of time because you need to know where that is. It could work against you if you don't go top down. But just because you get above the 1 minute 200 moving average doesn't mean that you're going to stay bullish. The smaller time frames, they have more a lot more volatility, and they go in and out among these moving averages a lot more. Now, hopefully that makes sense. I don't feel like I've done an adequate job explaining what I was trying to explain there. Let's see. Let me come back to here and see if we got some more questions. Tell me 2 liters. Glittery Marshmallow says, I way overthink things. Well, I think that's kind of common when you're getting familiar with the market and doing tea. I think I wouldn't beat yourself up about it. I remember doing that too. And I remember getting confused about some of the things, the fibs, divergence. Oh my gosh, that was tricky AF. And looking back, I don't think it needed to be, but I think it's our mindsets that we get in, because, you know, we're there's some pressure with us. We're trying to figure this out so we can get in here and make some money quick. And that, when you're first learning this, that's going to be more on your mind. How do I get it? I want to trade. Let me trade. And you're wanting to get out there and take action before you really got the comprehension of what's going on. And we all do it. And that's, hopefully that's why following some good people on YouTube that kind of explain their thought processes and go into details about it, you know, is good. And you know, somebody that I'm watching more now, somebody I used to watch back in the day and I used to learn from them, is Crypto Savvy. Now he's a little bit bearish bent, but he's not bent and biased like he was last time, but he does kind of, I found out today, think we might hit 68,000. What I can say positive about him is that he explains himself and he knows how this works. He's excellent on patterns, does them right, correctly. He is where I first heard mention Thomas Bukowski. If he hadn't mentioned Thomas Bukowski, I never would have found him, and then I wouldn't learn the stuff that I've learned. I would still be regurgitating probably the same things that you're hearing from Flag Guy, that were taught in the trading group that I used to be in, and or Thai Guy, as I call him. Kind of a more popular YouTuber in the morning, about 10 a.m. Because a lot of that's where that came from, is that trading group that I was in, and it wasn't all that accurate. I'm just saying. And some of those things get regurgitated. But Crypto Savvy led me to Thomas Bukowski, and I got to dive in deeper and learn things and go my own study on it. And then, you know, he mentioned Wyckoff and just him. So I got to give him a shout out, man. He's actually it wasn't the trading group that really pointed me toward the masters. It was more like Crypto Savvy. And then also hearing from Mitch Ray. Mitch Ray has a lot of respect for the masters too, and that I agree. I don't think he likes altcoins very much, but you know. But I agree. I think that's the way to go. But Crypto Savvy, he explains things really well. He's very well versed in Elliott Wave, Wyckoff, pattern, and you know, I watched him today, and just the way that he explained the RSI to somebody, I was like, dude, you are awesome at really just casually, conversationally breaking this stuff down, without having to take you through a you know, some boring article or anything like that. But you know, you know to go back and research it too. But he does a really good job. He's on top of this point, on top of this game. Just as long as this bias doesn't get to it. I hope I don't see that again. I saw it last cycle, man. When we were going up, he was bearish the whole way, and I couldn't figure it out. But he talks about he went through a little burnout and stuff like that. So I don't know. His TA is, when he's not biased, his TA is on point. He knows how this stuff works. He knows market structure. And so for that reason, and the way he explains his mindset, he's a good follow, I think. If he goes off the deep end, I'll warn you. But I respect him. Ryan K says, I think I got you. So pull another fib after we top the 618. Well, you pull at, it doesn't necessarily have to be 618, but that's a good place to look for a pivot, right? You just want to make sure that you're getting you know, you got to have a bottom and you got to have a top before you pull your fib. And so this one and that one make a good one. You could do this one and that one, and if things don't quite line up, that's why you want to look to the left or see how things kind of play. You might want to take in consideration here, because that is the bottom from this whole move. But yeah, you got different schools of thoughts on that, you know, but you can't go wrong from absolute bottoms to absolute tops. And in my mind, that would be a great one. Let's just see what the difference is right here. From here to there, man, okay. A little fuzzy on the 382, but the 0.5 looks pretty much on target. And you'll probably do fine with either, because this stuff kind of is like Legos. I don't know, they just kind of overlap and stuff. It scales in a way. So see, pulling from this the wick here to that top wick, not quite the touches. So if I do see one, if I do a pull and I see it where I'm just not quite getting the touches, to me that's not. It needs to be tuned. And when I say tuned, means we probably need to find another little. We probably need to find a better place to make sure we're pulling from. So this one works better, in my personal opinion, than this impulse move. But you can make an argument either way. You're just like, well, why is it not hitting? Well, either we pulled our fib wrong, meaning maybe we went too far away from it, need to tighten up our game here, or we just, dial it into maybe we missed a low or missed a top. And if it's still coming up a little bit fuzzy, well, maybe we can expand it to our next low, and you might get something a little bit more there. And man, do we! Now that one nails it. And if it nails it that well, I would pay more attention to that one. And this one, for pulling from here to there, I see a lot more respect, and so I think you'd be more accurate going by that. If that makes sense. Try to clean up my chart there. See what else we got here. Hey, Bullish on Parade, how's it going? I never put a trend on the RSI. New door unlock. Yeah, you can chart anything almost, and that's helpful. I think Crypto Savvy was the first person I ever see do that, and I've seen a few other people do it too, and yeah. And it will, you can get a wealth of information by doing that stuff, because you'll get breakouts on your indicators too, and that's potent when you get a breakout on your indicator. That might be the little trigger, or that little secret sauce that can help you decide to get in on a winning trade or something. Just something that simple. Put the lemon in the water. Bullish on Parade says, macro fib 69K down to 15K. Did we hit the 0.5 yet? From 69 to 15. You're talking about back here? Let's go to the weekly. Let's clear this off. So I'm assuming you're talking about from last cycle down there. Have we hit the 0.5 yet? We're past. Unless you're talking about like some kind of an extension. So if I'm interpreting what you're asking, I would interpret it from this high to this low, and the 0.5 would be here at 41,000. So yeah, we've exited the whole range for that now, but I am very, very impressed with, because I haven't noticed this before, how our retest, that low that we just had, 76, is bouncing off the 1.13. That is cool to me. That's making me feel more confident about the market, and also that 50 moving average. But ideally, what I would be looking for, that's not normally what I'd be looking for when I do it. That's one way to look at it. Don't get me wrong. This is valid. That's valid. But the forward working way for defining, we're going from lows to highs, and this one works out pretty good too. And that's why I'm still looking at this. I'm still throwing up that 382, but it's looking like we may not touch it. That 382 perfectly got the resistance there, and our 618 did a really good job of getting that support. But we don't know, this is just a local top. We don't know exactly where the top is. Some people might even, there's sometimes when I think you can take a fib, it seems to know where it's going to go. And sometimes if you can find areas that, like maybe this, you call it crazy, but it's an idea that's worth playing around with. Watch me take my fibs over here. I got a 382. We'll consider that as resistance. 618 is resistance. See how they kind of line up? What if we're reverse engineering the fib thinking outside the box. But I mean, in retrospect, this is what it would look like if it went up there and we pulled a fib. We'd look and see how well it matched the things. It's like, yeah, 168,000. Could that be where we're headed for this run? Possibility. I think so. I want to market that little guy. I'll race it at some point, but that's another little idea that's outside the box of the fibs that you pull it out, and you just have to play around with these things for something like that. You can't prove it, but could happen. Lined up really nice. Now, if I find some conflict, we start getting into like the fib extensions and all that stuff in the next few weeks. Have we got anything? Let's see if we got anything that's... Oh, snap! Almost. He didn't nail it. We're dialing some stuff in. Oh, we have a bottom to here to there, and we come with a 100%. And were you a... You know, 168,000 might be our target for Bitcoin. I'm just saying. I'm not saying. Is there a way to document this? I think 168,000 might be a nice little target for Bitcoin right there. What else do you say over here? I'm playing with the fibs. A little above the 2618. I don't have anything else up there. Maybe. Well, this is all speculative. We're getting down the rabbit hole. Clear Marshall says, I watched a lot of people, but the way you teach just makes my brain light up. Oh, cool. Well, at least I resonate with somebody. I think some people just at me like, what? I said that. I read 100 books and you have a 1 hour lesson and I get more out of the way you explain that. Well, thank you for that. That makes me feel good. Well, that makes me feel like that's achieving my goal. Sometimes I don't know how people receive me, and sometimes I wonder if people can learn from me. And also, that's nice. Thank you very much. Tells me I'm on the right track then. Bush on Prairie says, what's I meant 1.5. 1.5 Fibonacci. I thought we got up to wasn't this was 618? From my extensions, my little cheat extensions, I got a 1618. The 1.5, which I don't use, but I do have a 1414. Yeah, we already did that. Now that's just one way to do it. There's another way. But how? Now I'm going to get confused here because I don't usually use this method. If I'm taking it from over here, but that's not pulling it the way that you had it. I'm just pulling it from top to there. I'm getting a 1.5 coming in up there. Without me going down too many rabbit holes and doing a lot of different little fib calculations and fib pulls, I'll just say, yeah, we went above that 1.5 from pulling from 69 to the bottom. Yeah, we actually got a little bit above the 1618, which says that this is a toppy area. And if we're looking for AB equals CD, which I think you got one here too, maybe. No, not really. I'm sorry, I'm getting a little bit off topic there. But there's no surprise that we didn't have a pullback. But just seeing us mess off that 1.13, I think that's very interesting. I like that. That's got me actually kind of bullish. I'm glad I stumbled on that tonight. I have not looked at that before. And that's one of the cool things about fibs. You can just play with them, and even in hindsight, you might learn something different, something new. I'm sure don't let the other stuff I've been doing confuse you. That's just this is like me taking a tape measure and measuring a little box and every little thing on the box, and that when I probably don't even need to. I'm just looking. I'm just don't let it freak you out. The basic stuff we went over the fibs. That's an important way to look at it. Let's see. Everybody, don't forget to leave a like. It's free, and you get a free smile. You do. Hey, I don't want to. Hey, don't you? Okay. Learning stuff on your own show, dog. Don't be learning stuff on your own show. I think that's what he said. All right. So I don't see any more questions there, and I think so. We went over a little bit of the fibs and kind of straightened some of that stuff out. We didn't really go over moving. I don't really need to go over moving averages. It was basically about fibs, how to pull them. That's one of the things that we kind of discovered. So swing high to swing low. Tell me where price is going to go. Swing high to or swing low to swing high. Tell me where I need to buy. That kind of clears that up. I hope. And then trade setups. I don't know if we spent enough there. The biggest thing I want to talk about that was the triggers. And you're always going to find, you know, patterns are where I usually look in trend. Trend lines is what I'm really, trend lines and fibs. I'm really leaning toward that now. Patterns, I still love patterns. I'm always looking for them. Everybody seems to have a little different idea on patterns, and of course I'm always going to go with Thomas Bukowski's ideas because that just works. They just work. It's the best way to play patterns. I like this. I really like this. On our third step, possibly two more up to 160. That works. Believe it or not, that works. Oh man, did I move it? Lock that in. Lock it. Man, I was hoping. What happened? I was really hoping for $250,000 out of this cycle. You're telling me 168 might be the top. It might be. But that's a good 2x from where we are now. Hey, for Bitcoin. I need more. Yes. Okay. So I was trying to get back onto the trade setups. Let's go over a few little things on trading. And I've done this a little bit recently, but I just want to kind of drive it home. When we are doing a trade setup, and how you tell if a trade is worth it, because that little long and short tool is kind of helpful. Not mandatory. You could easily just get that little measurement tool. So let's just say we had a trade set up and we got a candle breakout. It's above the 9-moving average. Looks like she's going to do something, right? To the upside. We just don't have the crazy ass measure move. I would be if I were going to be playing that with a measure move. All right, here's one thing that I'll point out that I do differently now than what I used to do, and there's a recent change. Up until about maybe a year ago, I kind of revamped on what bull flags and bull pennants are. And now if you want to, this is really just a channel. This is really not a bull flag. It's really not. But if you want to play it as a bull flag, well, I mean, I guess that's up to interpretation. If you zoom out enough, maybe it would qualify. So who am I to say? But if you wanted to play it as that, I used to put it, I was taught to put it at the breakout, which that does pretty good. But what I've found is that because this is not a good example because it's not a flag. This one was. Can we go over here? I mean, we can count this one as one. I guess it's very steep, or a lot of people did. Your flag boys definitely did. But you take your measure move, you're trying to play that, and I was always taught to put it at the breakout. And by golly, that's not bad for that second run. But Thomas Bukowski says, you put them in the bottom. Since I've been doing that, they've come out a lot better, especially for the first run up. Just sharing some ideas. I'm just not giving you the best examples, but that's what I've been doing that. Putting them at the bottom, and that actually kind of corresponds with the AB equals CD fib ideas and things like that. I don't know. I just thought I would mention that. Let me check and see if we got any more questions over here. Hey, Rock, how do you feel about the 888 fib, or it's 886 is what I use, because that's math. I think it's a mathematical formula. All the ones that I've got. So I think you meant to say 886. You divide or multiply by the 0.618, and that's where all these little guys come from. Or you take that away from 100. That's where these guys are coming from. These are all mathematical calculations. Those particular fibs that come standard on here. Everything but the 0.5, which that one is a very interesting fib level, to be honest with you, how it reacts, and the levels that you can bounce for targets off of that one is you get a little boost in my. The 886 is just a deep ass retracement. 786 is usually where we want to bounce, and the 886 is if we lose 886, I mean, well, you got double bottoms. It slows you down when you do that, but you can recover. It's usually you're going to have to range and then recover. It's going to be a little harder to recover from an 886 retracement. And sometimes you'll see things wick down, and then they'll hang around the 786 and then recover, and that's all cool and everything. But we don't want them to go as deep. And the 786 can possibly get you to a higher high. The 886 usually does not. You usually have to get up, and you may make a higher low. So the deeper that you retrace on the fib, the more work that you got to do to recover and get more bullish to get above that 618. So I hope that kind of helps that answers the question somewhat. Medina says, I would love a class where you do actual trades like paper trading. The 1 minute. So it'd be quicker. Whoops. Things jumped up. I lost you. I like when you've been using the 6 minute also, but a class where you play stop losses. And I've done that before, and it's good little practice. I might do that. I don't know if I would do it on a private. I don't know if I'd do it as chart school or anything, but I kind of, sometimes on some of the music streams I do, some of the early I was doing it on the 1 minute and things like that. I was doing slonging, which that was a waste. But yeah, I could try to work some of those things in. We just hadn't had any good setups lately, or you'd see me doing it. I just haven't. Market's just been ugh. Loves it. The teacher learned with. Oh, we're always learning, and seeing how these things react. And the fibs just they're always full of surprises. Always. Ron says, I so appreciate the explanation, amazing how the fibs play out. They are such an amazing tool. I'm also watching how the Ichimoku cloud predicts the future. I've watched it play out in real time. The cloud, now I wouldn't be paying attention to the cloud if it wasn't for the bot that I used to do, Gunbot. And the guy, Gunthy, who came up with the bot, he had this proprietary strategy that he programmed into it, and it was based off of Ichimoku Cloud. So I thought, well, if it's good enough for him, I want to pay attention to that thing. So I tried to learn what I could about it. And there's a lot of little lines and other things that go with it, like look like moving averages that I don't play. I just basically use it to help me figure, if you're below it, you're bearish. If you're above it, there's certain little things that it tips me off to that I like. I just like having it there. If I don't have it there, sometimes I get lost on whether I'm bullish or bearish. Sometimes it feels that way. But man, coming into these green clouds is not fun. We want to get out of there. Get out of there. Get out of there. But yeah, I do like the cloud. Bulls on Parade says, yes, I had the 1619 area on the fib, I think. 169.420 would be hilarious. Oh, wow, that would be. Bro, I like that, would be. Hey, there's Jesse. How's it going, Uncle Jesse? Market fell down. There goes vacation. All right, guys, I don't see any more questions, and I think we've been going for about an hour. Wow, hour and 20 minutes. I gotta get ready for the nightly stream here about 10:30, but hopefully this has been, we address things in. So next week, I think we'll continue with the fibs. Get into. I think I've touched on it on the last one a little bit. I'll get into some of these guys. I use them as extensions here. And then we also have an extension tool, which is where these come from, but not the way that you would think, for real. You got the 3-point extension tool. I don't use this one as often because I've kind of got it coded in over here, but a lot of people do, and sometimes I do, just to get those higher areas that we can go to because it can be kind of juicy. But I've got a lot of them there, don't I? We can get into some of those ideas and get in more to the AB equals CD thing that when we get that higher high and you see me on my charts and we do, nailed it. That's what's getting me there, and we'll get into that, and hopefully that'll make more sense. It's all about my strategy. I want to find pivot points. Now, some people just want to take the market level to level and trade, here to the next and things like that. I just want to look at it different. I was like, well, I want to know where things are going to go the other way, and I've, the fibs have been the best thing to come close to that. They identify where things are going to, I need to take a break. I need to correct from here. And we get that. They've been awesome for trying to, they're like almost that and a few other little things are almost like a crystal ball in this market. The closest thing we got to a crystal ball. One of my mentors used to say bullish and bearish divergence were the closest thing we had to a crystal ball. And that was really cool. You take some of these little strong little things, and you put them together, and they just get even stronger, and applying them together at these levels of support and resistance, and then we got something that works more often than it doesn't work. And we'll explore this all together here. Thank you so much for hanging out with me. I'll see you guys here at 10:30. You guys want to hang out with me? We'll go over charts and altcoins and Bitcoin and all that good stuff like we normally do. Trying to find, eyeballing some maybe. How's the market looking over here? Altcoins. Maybe we'll find something working for altcoins. Bitcoin looks like it's getting ready to steal the show. My personal opinion. Bitcoin dominance is definitely going to have an effect on altcoins. All right, so guys, I'll see you here at 10:30. Unless you want to join me, and thank you for being here. And anybody that's new to the chart school, or you got one of the gifted memberships or something, there's some alpha over here. I moved all the chart school videos over here. A lot of stuff that I've done a couple of years ago, a lot of things that I've done this past year here or recently with the chart school live series. And I don't know, there's some portfolio videos going over spot margin and some strategies there, and just there's some stuff over here to make it worth your while. See you guys later. Let's go to the end screen. Dang! Oh crap, we got a super chat. Thank you, Ryan. Thank you so much, my man. Hey, we got hand clappies over here. My hand clappies are not working. I don't know how you can have a stream without hand clappies. There they are. It's all about you guys. Whatever questions you got, I'm always up for questions. I don't know everything, but if I have an idea or something, I'll share what I do know. And if I don't know, we'll try to figure it out together. Kind of like that thing about the futures questions last night that was throwing me off, because with futures and the perpetual futures, on how you renew a contract, because I've never had to do that, but we found that answer and posted it over there. So I never want to give the impression that I know everything, because I don't never want to give that impression, but I am good at finding it. It takes me a while sometimes, but I'm good at finding it. Oh, there's Brave Expanse. Tips turn to light. I'm right. How's it going, Bruce? That's how a lot of you guys have got here. If you woke up and said, "Hey man, I got this free membership over there, let me go check it out," it's because of Brave Expanse. All right, guys, I'll see you in a little bit. Let's get the dog to wave officially. Let's get the dog to wave officially. All right, the dog is not going to wave. Is Mercury still in retrograde? There he is.